What's up, guys? It's July 22nd, 2025. Tricky day in the markets. So I didn't trade the RTH session, but I did swing some options and they got crushed anyway. So it was a tricky day. Price action was tough, The opening price action gave the idea that we were going to get at least a second leg down, retesting lows, but it ended up being climactic. I've been staring at this chart for about 10-15 minutes before I started this review, and it didn't occur to me that this is the first gap between, this is multiple bars on the 5-minute chart, but let's just say maybe on the 25-minute chart, 30-minute chart, this is the first gap bar below the 45-minute EMA. And what's one of the setups when you have over 20 bars above the EMA? I'm gonna turn off, actually. Look, when we have a trending market, what's the setup that we break below the EMA? What's the setup? It's a fade. It's a better fade than with trade. So this was actually a better buy to the EMA, and sure enough, the price action proved that. I want to give a quick shout out to the subscribers and members. I appreciate you guys. If you haven't already seen, I changed the memberships. Everything's still included, but the name is different and the price is cheaper. It's called Second Leg Snipers, and I'm going to be talking about how I find second legs, how I enter in the markets, how I'm exiting. They're going to be winning and losing trades. Give you guys a quick example. Bulls got the breakout here. Bears, you could say bears got traps here, but I don't think the market's going to come back down. It could come down here, but I'm willing to, my stops around here. I'm willing to get filled here and sit through some drawdown. Bears shorted right around the EMA. We've had many bars below the EMA. Bear short below the EMA, bulls breakout, and now we know that there's a bear spike because of this tail right here. So the trade premise is bears get short here, bears short down here. They're trapped, so these bears are going to have to average in, buy back shorts, and I like to buy where trap traders are getting out. So that means if I buy when trap traders are getting out, the markets are one-sided for a brief moment in time because front-running bulls are going to be buying the breakout. Trap traders are going to be getting out and break even, and second leg traders, scalpers, are going to be joining in on that pullback. So there's a good dynamic for a quick move in one direction. In this case, that direction will be long. So yeah, that's what that's what the memberships are about. That's what I'm going to keep zoning in on. I'm having good success with that. I'm going to have some fun this weekend and try and build a system to trade the first 30 minutes of the day. It's going to be mean reverting. That's still one of the first principles. The first principles of the stock market are it's either breaking out or mean reverting. So these bars are breaking out, and now the stock market's mean reverting. So as long as you build a system around those principles, they will, theoretically, it should work. Now, building a system, and trading a system are two completely different things. Generally, from my experience, the trader who builds a system is not the trader who trades the system. I'm not talking about two different people here. I'm talking about us being one person that as soon as you hit in the markets, as soon as you're looking for that trade, as soon as your setup's heating up, you become a different person. Your caveman brain gets activated and things just psychologically, things start to change. So the person who does the back testing generally isn't the person who's trading. As a trader, a good goal would be to become proficient in price action, understand what you're looking at, build a system around the market cycle, make sure that system is based off of, so if you're going to build a system around breaking out in channels, that's the first principle that the market's breaking out. If you prefer to build a system in a trading range, that's the first principle, the market's mean reverting. And that's kind of how you want to build your systems. I totally forgot where I was going with that. If you're looking to build so first you learn the first principles, then you build a system around the market cycle, and then you back test it. And then once you back test it and you have credible results, that's when the psychology comes into play, because now you have proof what you're doing is going to work. But when you forward test it, you start to oversize. You take trades not within the system. And that's all psychology. So back to where we started, the trader who builds a system generally isn't the trader who trades the system, and our job is to close that gap. And it's a fun process. I've been following my system more and more. I've blown up hundreds of accounts. You guys know that. And every time I blow up an account, I get one step closer. And now I'm really starting to feel the power of training one system because I've crawled out of a few drawdowns with this account. So that's pretty cool. Where are we? Okay, weekly chart, daily chart. Weekly chart, it's Tuesday, it's Wednesday today, or no, it's Tuesday. and we have a bull bar. It's a small bull bar. We're trading at new highs. Nonetheless, market cycle says so. This is so there's a couple of market cycles. Let's call the market cycle reset from above, breaking out above the EMA. So the market cycle resets leg 1, pull back, leg 2, pull back, leg 3. And now that third leg says we should be in a training range and the market's going to be more mean reverting. However, there's enough momentum for here, and there was a training range here. So on the smaller time frames, this is a market cycle reset. Leg 1, pull back, leg 2. Maybe we need a smaller bar. There's a pullback right here, so maybe we need a smaller bar right here to let the markets know we're in that third leg, start mean reverting, or maybe the bull starts to rally at new highs. This is becoming a high 1. Well, this is actually the high 1. So high 1 here, and this is getting follow through. So it'll be interesting to see what happens later on in the week. We had some selling at open, so bears are definitely out and they're making money. It's just the days are closing bullish. Daily chart, leg 1, pull back, leg 2, pull back, leg 3, then we go sideways. Then we start to break out of that range again. Problem with this breakout, it's getting bad follow through. So if this was the swing high of the breakout, leg 1, pull back, leg 2, it's getting bad follow through. Bulls are not able to close on their highs. When we were getting close to the EMA, bulls were getting good closes, but now we're far away. They're getting bad closes. There's a lot more overlap. All right, bar 1, bear bar closing out slow. Bears are shorting down here. We know that because of its tail. However, it's a problem when we see bar 2. Bar 1, bears are now trapped, but bar 2, they're going to short higher, and they actually get out of break even. Bulls that see bar 2 have a small chance to get a second leg in because there's a tail on bar 3. However, there was many bears shorting below the EMA. We're below the EMA. We're crossing over, so we're entering that bearish territory. Bears are willing to hold their short, so they short here, and they're holding. Then they see bar 4. Bar 4 is a good breakout bar, and it produces a gap when 5 opens up. The bears that shorted here, this green line is their average price, right around here. And now they see bar 4. They're going to press their position. Trap traders become traders who are not pressing their position. So those trap bears press their position on 4. They're selling. Problem with bar 5 is it went too far too fast. It became climactic. I think this is what started to trip a lot of people up. Is it looks like this price structure should get a second leg, but it could have been a second leg from yesterday. What the heck? There we go. Leg 1, pull back. Leg 2, second leg trap in a trading range. And not to mention that this is the first gap bar below the EMA, so it's actually a better fade, better buy. So if we were looking for a second leg, if I was trading this today, I would have had a short right around here, and I don't know if I would have sat through this entire thing, because I had done a study that says I should be getting out with about 7 to 8 bars of the trade, and when I have it set up against the setup, it's better to get out at break even for a small loss. So it's very easy for me to tell you I'd get out when I can see it's going to be a loser, but I don't really know what I do, because I was short on my options account, and when I trade options, I usually let them go. I traded under like around 80-90 cents, so they expire worthless. I shorted here, I shorted here, and I shorted the EMA, and then I think this rally just made them worthless, so I let whatever happen. So it's hard to say, but with my futures account, I don't know what I do. But if you were to get short here, there's a lot of time to get out of break even or for a small loss. Now, if you're getting long, that's a hard buy, because bulls are buying down here, and yeah, they're trapped. Bears are trapped. Excuse me. If you're getting long right around here, it's hard because we're below the EMA, and none of these bull bars are getting followed through until right around this rally. If you bought anywhere in this rally and put your stop down here, you would have caught the second leg. So bar 6, inside bar, okay to get out after a climax. If you see a climax in inside bar, breakout mode, it's best to just get out and wait. Then we see bar 7 sells off and rallies, so that could be a leg 2 that doesn't get the minimum objective. And then we see a pullback 9, 10, 11. Bears that are now trapped down here. A lot of bears chase the market. They have a quick opportunity to get out, break even, and I think they take it. So bears short down here. They don't get there. They miss their target by 1 tick, so now they're trapped. Rallies, shorting again at the swing of 5. They get out 11 and 12, and that causes a second leg up 12, 13, 14. Now we use the same context again. Bears that see 11 and bears that see 10 and 11. They want to get short, looking for that leg 2 spillover. They're seeing 3 legs up. Leg 1, pull back, leg 2, pull back. Leg 1, pull back, leg 2, pull back, leg 3. They're thinking wedge top and selling off. They get short right around 11, and now they're trapped. They short the EMA again, get out at break even, and maybe some of them make a point on 17. And then that creates that bullish pressure because bears buy back shorts for 18, 19, 21, 18, 19, 20, hitting the swing of the 14 high. So there's your leg 1, leg 2. Bears are now getting trapped pretty bad. You can just keep repeating the process, but now if you're gonna take the long here, we're at a trading range high. If the EMA is the resistance, we're at that high. But look, bears at short 17, get trapped on 18, they short more, get out on maybe 19, 20, 21. Market sells off, you're almost stopped out, but then it rallies, and actually, it's hard to say. For me, I put my take profit 1 tick below, so I probably would have got filled on 34. I don't know if I would have exited right around here. Take that same idea. Bulls are trapped on 24 is high, so bulls are buy here. There's not really a tail, so there wasn't too much conviction, because if there's a tail, we know the traders are buying, but they did buy right up to the close. Now they're trapped on 26. Look, trading range have deep pullbacks. You might get stopped out on 28. So bulls buy here, they buy more here, 50%. They get out at 50%, sells off, and you hit your target on 31. Market's going sideways, tight trading range, 33, 34. Bulls try and break out, but then sells off, 35 and 36. Looks like it's strong enough. I'm going to set this trade up real quick. I was just looking at it. So I wanted to get filled here. Couldn't get filled. Made a new high, so I'm going to go for this leg now. Bears get short down here. They're trapped. I'm betting that we're getting close to a high. So I'm going to set it up here. My stop's going to go maybe... I really don't like putting my stop there. Like, we're so close. I might just have to pay for the extra. Put my thingy there. That's right above the hard time frame EMA, so that's not too bad. Put that there. It's not bad at all. Oh, look. Bulls are still... Man, that would have been a nice rally if I got filled, but didn't happen. It is what it is. Didn't get filled, so it's not my setup. It's not the system I trade. All right, so I'm looking for that pullback to get tagged at the 50% mark, betting that bears get trapped. Hold on, this math is wrong. I have to put the entry where it's supposed to be, and then my stop. There it is. Because I want my stop to go down here, but the bears get trapped right here. There we go. So I'm betting on bears being trapped. Well, bears are trapped. I just don't know if this is gonna be a second leg trap. Bears are short down here. I'm betting the spike starts down here. They get out 50%, and that causes a second leg for the bulls up. Same exact thing. Bears see bar 36. They're gonna short here, and then in this situation, it actually came back down on 39. That created a double bottom. So when bears get out at their recent entry, their recent swing, they buy back shorts, and that's what creates a double bottom. That's why a double bottom is a bullish setup. So they buy here, and look, that causes the rally. Bears are buying back shorts. I think a lot of bears, including myself, were looking to get short here. So like not necessarily here, but just short anywhere to catch a second leg down here. And since pretty much every bear bar was met with a bull bar, 2 bear bars, strong bull bar. Bear, bull, bear, bull, bear, bull. It was trapping traders. It was trapping bears, and they kept having to buy back shorts, which eventually caused an endless pullback. Rally starts to break out here, the trading range, 46, 40, 40, 44, 45, 46, breaks out, and then we can copy that dynamic. Bears get short around 44 low. They're trapped. But then look, the rally never happened. So when limit order traders can get in a trend, it's not as strong as we think because people aren't able, that dynamic for 3 types of traders buying the market are not there. So in this situation, limit order traders weren't able to get filled, and look at 48 climactic, and then it sold off. So if you still had your fibs extended, you'd get stopped out 58, and then it goes straight to your target. If you went from 36 low, bears shorting more, they get out at break even, they make some money on 58, and then you still meet your target. A, B, C, D, it works. It works because traders are trapped. It doesn't work when traders get out. So if, for instance, here's an example of it not working. This is a trade I didn't get filled on today. I want to take this short here. Bulls buy here, they buy more here, they get out at break even here, and it sells off. But look, the sell off already hit my target, so the dynamic was gone. So I had to, that's when it doesn't work. So, because sometimes you could just say, oh, I'm going to leave my order there anyways. That's okay. Sometimes it'll work, sometimes it won't. But if you leave your order there and the dynamic is gone, the context is not there, then you're just gambling in what you think is a setup. So we trade context, entries come second. I know a lot of second leg traders, and we all enter differently. It doesn't even matter. We're all trading the same type of legs, but they enter what feels comfortable for them, and it's context then entry. Big rally, sells off 50 to 54. Bulls that buy up here are now trapped. They're going to want to get out at break even. The bulls that buy up on 48, 49 get their break even opportunity with bar 56. So bulls are now selling out. Bears that shorted here are making money. And second leg bears, us, are looking for this second leg down 57, 58. And it happens in a fast way. It ends up being climactic. Testing 38. And an entry, limit order above 38 with a stop right around down here. Here is another type of second leg. It's called an 𝐬𝐸, sorry, coined it. You're gonna have to do your back testing. I back tested it. I traded it for a while, but then I came to the conclusion that it doesn't just, for what I'm looking for, I don't get filled as much as I'd like. Whereas a 50% trade does. So I do like that because it's still second legs. Bears that short up here are now trapped, having to buy back shorts, and that causes another rally up. Because this is an emotional bar, and it rallied up, so it trapped bears 58. Rally 59, 60, 61, 62. It started down here, so that's where you want to put it. But sometimes if it's too big, I'll move it up to the next leg. So here's a trade, and I don't know. Let's see, actually. Let's just see if 78 sold off or rallied. I think it's, and then we'll call it. Yeah, so that's what I was thinking. It rallied first and then sold off, so you actually wouldn't get filled by the end of the day, but you have some time to get out break even. So what I mean by that is, if you're looking for this type of second leg, by the time you get filled, it's the end of the day. So that leg's burnt, or that trade's done anyways. Hope you guys did all right. I know today was a little bit confusing. Endless pullback days are tough, but the the context for this fade, it made sense to me after the fact. Of course, after the bars print, it makes sense. But anyways, I hope you guys did all right. I'm filled on this trade, so I'm gonna upload this and watch this trade and do some things. I want to backtest a couple setups. I want to make a backtest that works for the first 30 minutes of the day, because my schedule is changing up and for the better. But it'll be fun. I'll tell you guys once it's permanent. It's not permanent yet. Bears, I get short up here, and now this line is their break even price. My target's the previous swing minus 1 tick. So I'm pretty much losing a point on every trade because I moved my stop 1 tick. But in this situation, it's more. I'm probably gonna hit out early, but generally, like I'll show you. Generally, my stop is like this, 1 tick below, modify. That's generally how my stop is. Then my entry is 1 tick above, and my take profit's 1 tick below. So I'm losing about, technically it's a negative RR trade or system, but yeah, I'm also going to be more right than I'm wrong, so I'm okay with that. And I'm doing different types of back tests to hit out early, so that's also helping the expectancy. So yeah, that's the system. That's what the memberships are about. I hope you guys are doing good. If you learned something, share a show. Don't be a hoe. I'll talk to you guys tomorrow. Thank you for your time. Bye.